Good morning, friend. This is Jeff Arcos. Welcome again to the daily webinar. Today we are 29th of July 2019. Remind you that this webinar is not meant to be a financial advice. This is only an education presentation. Um, please, I forgot what I was reading here in my side. All right, so yeah, so this is just a presentation, and it's not advice. So please consider term and condition before you continue, and when you're receiving this recording as well. Thank God to the another day and another week into our lives, and pray His blessings today in Jesus' name. Amen. All right, before that the presentation, I was saying I just have two things that through the week actually I'm gonna say to everyone. One of my friends called Richard, he's actually a guy from Gold Coast. It's been since 2012. He's been always, implementing ideas into my EA and copying things, that I do para transform. So the update he does done in the EA is quite remarkable. And I was telling to everyone, maybe if you're interested to maybe give it $50 to him, because that's the E8 is there, but he has improved a lot. I feel in my heart, this being a quite good improvement, but you will see anyway the improvements. And then, as I say, this week I will testing the E8 through what happened. Richard is not here today, so as well that we I have a presentation to run today, PowerPoint, and what what is actually now, that as people know me from the beginning of my journey, the weekly time frame always being my start, platform, and doing from there. After been doing, intraday trade and all this, and find, that the bigger the picture will look, the better, and how we're gonna improve. So just gonna run through the presentation before we look into the chats, and so it will make a little bit of more sense of what we doing today. All right, on the news side, we don't have not much to date. After midnight, we don't have nothing. Now I just need to check whether this Friday, yeah, is non-farm payroll. So normally when we get in towards this announcement, things, are quite slow sometime, and other time is volatile. But I will see that there. All right, so let's run the presentation, and um, I think I need my fisherman's. And yeah, so there are so where we are here. So slide shows from the beginning. All right, so what we're gonna see here is actually the work of 10 years around the weekly candle close, not the weekly candle close, but the weekly time frame trader. All right, but what I'm going to now is split into three different strategies, and we will see each one of us as an individual. And after that, I would like you to comment about it. All right. So we have three weekly candle trading strategies that we're going to be using from now on. So the first one, it will be the weekly candle trend lines, which is um, actually was the second strategy came to me after the weekly candle close direction. All right, so we're gonna differentiate. So I believe the trade number one that always gonna happen first is the weekly candle trend lines, and then we have the weekly candle close direction, which is the first strategy in 2013 when I discovered this. And then we're gonna have the weekly candle close reversals. All right, so they are three completely different. Sometimes these two is gonna collapse, and sometimes we're gonna be trading one that then if things not go in that direction, then we trading the other one over there. But this one definitely is gonna be an individual, never gonna clash with anybody, and we're gonna see the difference. All right, so the weekly candle close trend lines is simple. We're gonna first of all looking for monthly support and resistance shopping levels. Then we're gonna draw trend lines on the weekly highs and weekly lows, and then copy to the daily chart or cloning. And then what we're waiting is for the daily trend line breakout. Now, one thing to observe here is that in all these three strategies that we're gonna see, the daily index meter is going to be always the trigger point. All right. So all of this is going to be the daily index meter. So in this one is very simple. Once a week we draw our trend lines on the weekly, and when we have that daily breakout on those weekly trend lines, we make sure that we have a monthly support and resistance shopping levels. And the daily breakout, it need to be tested by the daily index meter if we are in a potential over there. So this is my second strategy I actually discovered. This is my all index meter. But this is that it is. This line here, this is the weekly, this is the daily. So this line here is that monthly shopping level. This is the weekly trend line, and this is the daily breakout, which need to match with the index meter. All right. And that's the results. So that was when I did have my first EA that I created, Trendline Trader EA, and that was it. So here we are again. Some kind of resistant on the monthly. This is a monthly perspective. We got a weekly trend lines, and we got the daily breakout, and the daily breakout it match with the index meter, and therefore the trade is happening right over there. So this trade would be called aggressive way of trading because we're trading specific the trend lines breakout, which is normally happen very early than anything else. Then we have here support has become resistant. So that's a monthly shipping level. This is a weekly trend line, and we have the daily breakout. And then we look in the index meter. Now that we have a much better index meter, so we're looking that way. And that is the trade. We got a monthly shopping level, so we will see how we can get this type of opportunities. So where is disappear my taskbar? There you are. So for example, to try to hunting for this kind of strategies over there. Let me see if I can jump out of that because it's important to find this on the monthly. The job that we need to be doing on the monthly to try to get these levels of support or resistance would be, let me see if I find one that can actually sometimes not resistant. So our job in the monthly is as well to draw the weekly, monthly highs and monthly lows, like this one, 2 months over there. But suddenly here on the third month, we got that. So therefore, when we draw our trend lines over there, all right, so we can see here on the daily that is actually whatever the day was the trade from there. Are you with me? So to find these monthly shopping levels, we need to work on the monthly time frame. And to find the trend lines, we need to work on a weekly time frame. And then we wait for the index meter to tell us the right day that we're going to be trading from there. Are you happy with that? So that's all going to be the job. Whether the market is going up or is going down, we need to keep always our trend lines in place like this one, it's just and this is the beauty that when you work like that, you can see what is happening through here, and through that that moment over there, what we want to be looking is, okay, we are in a possible support. This is our weekly trend lines, and then we wait for the daily time frame to tell us when things are about to run. Okay, so monthly shopping levels, weekly trend lines, and daily breakout. For the monthly shopping levels, we need to work how many times? Once a month. For the weekly trend lines, we need to work only once a week. And for the daily breakout, is once a day when the index meter is telling us for that. Does anybody follows that? So that's the strategy number two. Came 2015. I remember this one, and this is how you find these spots here is by going to the monthly time frame, draw the trend lines, and the third touch, what normally did. But there they are. So monthly shopping levels, weekly trend lines, daily breakout, index meta, and that's the trade. It flies. Monthly resistance became support. So monthly shopping levels, weekly trend lines, daily breakout, index meta, and that's the trade. Monthly shipping levels, weekly trend lines, daily breakouts from there. It was not that clear, but still. And I believe in outside these pattern breakouts are big and humongous moves. All right. So there we are. Monthly shopping. What is a weekly here? Monthly shopping levels, weekly trend lines, daily breakout, and that's the trace that it runs always there. Then we have a monthly shoulder, head and shoulder. So that's a monthly shopping levels. Weekly highs and lows. We draw the trend lines. We're cloning. We're waiting for the break. Index meet up with us. And that's the trade. And they normally run. So there's a very easy, lazy way to look for trades because we're only looking for monthly shipping levels. As I say, you're only going to work once a month. You don't need to spend hours and hours and hours to do that. Then once a week, I hope so everyone did the job on the weekend to put the weekly highs and lows trend lines. And then with the index meta, we're waiting for that magic day. And that is the trade there. There we go. Monthly shopping levels, weekly trend lines, daily breakout, index meta, and that's the trade. How many of you love this strategy? Alone, like that. Anyone interested in that? So monthly shopping levels, weekly trend line, daily breakout, index meta, and there they are. All right. So very simple. And the beauty of this that you can use that for anything else that it is. I believe that second strategy. Now that strategy there we could classify as aggressive. So my recommendation for that could be do not trade the full lot size, half of your lot size. All right, because we're talking about breakouts. Breakouts normally is going to be sometimes it's going to be the first candle, but normally it's going to be the second, the third candle, which is the exposure could be high. But if we half of the lot size and that first breakout, I believe we can do well. But it works very good. Now the number two is the that's what I call classic, the 2013 weekly candle close strategy, which is no brain. So we look in the same thing, monthly time frame support resistance, shopping levels. We're looking for the weekly candle close. Now in this case, we're not looking for the trend lines, all right? We're only looking for the price to close on this monthly support and resistance shopping levels. Then we look at the weekly index meta and the weekly watch list, which is giving us now the highest potential and probability trades that we have. Then we're waiting for a daily candle retracement. And when it goes in the direction of the weekly candle close, we need to be looking the daily index strength meta. All right, so that's the strategy number one, which is very different. Sorry, strategy number two, which is very different than the strategy number one. This is now we're trading with the momentum of the trade. We got the weekly with us, we got the strength over there, and that's where we're going from there. Okay. So there it is, monthly shopping levels and the first week, the first week, the first week, the first week, the first week. And look, we struggle sometimes. Monthly shopping levels the first week. And there it is. Monthly shopping level the first week. And sometimes we're going to go good weeks, sometimes we're going to go bad weeks. Monthly shopping levels, support became resistant first week, and same and all the levels over there. Resistance became support. First week, it didn't go too far. Second week, then we are. And we don't know when. Here as well, as I say, we could apply what? Our first strategy. So you will see now setups with strategy number one and strategy number two. All right? So that's how we're going to be looking there. Support, resistance first week, resistance first week, and there we run. Support, and support over here again. So we can trade in this anyway, and this is completely different than the other. So what we're looking over here is every week we're gonna follow the direction of the trend. We make sure that the index meter is with us. And but the most important part, maybe here I don't have it, is that we want to be waiting for the for the um for the pullbacks. All right. So this is a, as I say, is 2015 when no, this is 2013. Sorry, when things were running quite, you know, beautiful. And but we're looking that week over there. So that week is over here. And therefore, in this case, we were just trading as it goes. Normally, we want in the first week. So, and that's how things were running over there. So here it is, the second week. So what a beautiful, the retracements always happen, you know, and we trade in that direction only, regardless whatever is happening over there. New Zealand. So we got the monthly shopping level, we got the first week that turns around, and that is the beginning of the week. And again, look, the retracements happen over and over and over again in these trades and the index meter. We got the same an ABC. So and there it is. And this is the stop loss. The market got hit over there, and then the market just come back following the weekly candle close. This one is a bit sort of the tail is telling us more than the bearish than the there. This one was not maybe much clear. US Swiss the same. That's the first week. Support over here, resisting over there, support, and that's their big runs that sometimes we have. And this is the beginning of those weeks when the market just, you know, we're looking for that, comes over here, hits over there, and that is when it runs over and over again. So same with this one, the weekly is continuous. So we're looking for the whether it's break or retrace, and that was only looking for the replacement at the trial. Support, resistant, weekly candle close in the direction of what we're looking for. Index meter with us in that day. That day was a good day, and there we are for that one there. Australian yen. So here weekly says up, so we're looking for the touch, and the market perform from that level over there. Weekly here is telling us that is coming to the golden candle. So we're looking for the touch over there and then go in the direction that the weekly candle close is telling me. Support, resistant. So that weekly is telling us to look for short. The index meter, in this case, we only have the daily index meter in that. So, and that it is. At the end of the day, the market continue coming back to the same level to do his retracements from there. Weekly candle close, that's the start. Market retrace, and you just, you know, and any week you can jump as long the market retrace from those and the levels, and the market continues. So this is trading now the direction of the weekly. This is another kind of index meter I used to have before, and that was made by one of my friends actually. But this is what was indicated. You know, by having the name of the candle was not good enough for me to make my classification, but that it is. And again, Monday. So that's what sometimes Monday, you know, it's no, you know, sometimes I feel like a Monday we should do the webinars on the night time instead of the morning time because of this kind of events that is happening normally. There we are, support, resisting, monthly there. We got the weekly direction, put it over there and tell you that you can't get wrong with that weekly candle close direction. So that would be our second trade. So if we miss, for example, the breakout, that's fine. Or you don't want to trade the breakout, you just want to trade the direction of the weekly. So this is our second option over there. So here it again, the weekly selling is to us, go short. So we're waiting for always the retracement, and then the market comes back. There we are, ABC, market there, and again, look what is coming back. Always coming back to to the previous sort of highs and lows, and that's the stop loss, that's the entry, and that was the trade that it is. So here we're looking now at ABC and the long. So that's the Monday. So, and this is what I'm waiting always to the golden candle. Market comes and then bounce from those levels over there. Another one over here. So we're looking to go long, and look what it normally Monday does. Monday and Tuesday, and there it goes. It's amazing how the market reacts. That's what Monday morning for me always is a bit completely different, So there we are. So this is and this is being aggressive way of trading. Just you look in the weekly and you say, yeah, I'm trading that direction, and look in the watch list and trade that way. Okay. So same with this one. Monday is over there. The market comes over here, hits over there, and there we go. Now I believe it's a good way to do that one, this one as well. So I show you a little bit of that, and there we are. So here we're going to be looking only the weekly candle close direction. Normally we always say it has to be the first week. Remember, so it has to be the first week normally to trade, and the make sure is in this weekly candle close is we need to have some kind of resistance. So we're looking at the monthly shopping levels over here. We're looking over there, and we see that we are in a cluster of support. The weekly probably will come back. So my only job really it was into this one. As you see the lines, I said, okay, this is could be my entry. My retracement could be the previous high low, but my stop loss is that. So whatever is happened between the low and the previous low daily is going to be my entry with a very generous stop loss. So that day, for me, it was quite good to trade in this kind of day over there. All right. So that's that norm. Now, the most accurate, I believe, and this is this is a very aggressive way of trading. Just a Monday morning, look over there, and that's it, and pull the trigger. Sometimes works, sometimes doesn't work. But I find the most compelling in this type of trade always going to be, when we have the weekly, we got the retracement, and we got the daily pull down. That's always is going to be when we have the weekly in the direction, we have the pullback, and we have, in other words, the ABC. I believe it's safe. Now, if we're trading again, when we don't have an ABC over there, all right, and we're trading with it, that without the ABC, I believe that will be maybe half a lot size would be good enough to trade over there. But this kind of trade is the what we now the weekly candle close always is going to be with us, and this type of trades, and that's how we can approach that one over there. This kind of trades is proven us that the market is going the direction it said it's going, even if the weekly possible is no in that direction over there. And that one there. So beautiful weekly, beautiful ABC, and that's the trade, and even the second trade, and that's the other trade as well. Okay, so that's another one over there. Maybe not that one there, but that one there. All right, so this is the second strategy. We're looking for that kind of there. As I say, you can be as aggressive if you want it. Let's see there, there. So that's the beginning of the week. So here you can decide to trade somewhere over there, or wait for the daily index meter to give us a clear picture, and then we have the moves. Now, trading without the daily index meter, you can be right sometime, but you don't know which has big momentums into the market, and this is where it could be a bit dangerous over there. So waiting always for the ABC is going to be a good idea to try this market, whether we're going long or we're going short, and all these markets over there. All right. So we'll see that one there, but mainly there. Now the number 3 is the weekly candle close retracement, which is what we're looking here is a monthly time frame trend line breakout. We're looking for a weekly candle close that retrace against the breaks. So if the break is bearish, we're looking for a bullish weekly candle close. If the break is bullish, we're looking for a bearish weekly candle close retracement. Then we're waiting for the daily candle close in the direction of the break. Now, this one we're going to be trading against the weekly candle close momentum. So we're going to be trading against that one there. Sometimes, I said at the beginning, we're going to, between the strike number 2 and number 3, is going to be a crash over there. You know, they're going to cluster the one to another. So, and this is when we need to understand that one, that week, one day we're going to be trading long, the other day we're going to be trading short because of the nature of this. And of course, the daily index strength meter will be always our entry points direction. So that's why even with a weekly candle close, we need to wait for this magic daily index meter to tell us when to do that. So we got a weekly trend line breakout. We got a daily, not daily, sorry, weekly pullback. So this is definitely the moment the market breaks from here. So what I'm hunting from that is this, and then I wait for the daily index meter or the daily candle insinuate. Now let's see here. I got a break even, but there is another beautiful day. Maybe a break even, and there's another beautiful day. And we trade our direction from there. Now, if we look in the weekly candle close direction, maybe we can say, yeah, this is a monthly resistance. So let's trade this guy down. Now, if I patient enough to waiting for the ABC to go short, I never did have the ABC to go short. You see what I mean? So this ones it will be completely different than the other strategies whatsoever. So because we're trading against the daily, against the weekly, because we're looking this as a retracement only. All right. Canadian the same. So we got a monthly trend line breakout, which is that one there. We got a weekly pullback, which is that one there. And we got a sign of, that's not a bullish candle. Sometimes even by looking like that, it will be a nice trade to try. That's more classic. We got a monthly trend line breakout. So 2 weeks is coming down, but that week is up, and that week is says to us look for bullish. But then I wait for the day that is actually telling me going short. All right. So if I say here, okay, I want to be waiting maybe for the um the ABC. We never have the ABC. So what we're gonna be waiting instead of day-to-day. We understand that this is our strategy number 3 because we got this one over there, and this will be the daily index meter in place. Okay. So how many of you like these 3 strategies combined into that into this one there? So we have another one over here. We still trade in the direction of the breakout. All right. That's the weekly up. If we say, oh no, that's a trade over there. The weekly was actually somewhere over here. One was one over here over there. That's what I don't recommend, just to put the trade as soon the weekly is open. All right. We need to wait for the process that we know it works the better. So we need to wait very patiently for, whatever the breakout is there. And if we have here a bullish candle in the index meter, then we can say, yeah, this is a turning point. But at the beginning of the week, we need to trace this as the strategy number 3, which is the weekly candle close retracement. And from there, that's it. Just take the trace, pull the trigger, and that's all we can do from here at all. So that's another one. Look how many opportunities every time the weekly. Now, the weekly watch list will tell us to look for longs here. All right. So, and we've been missing those trades from time to time. Oh, what happened? Oh, it's finished. I just, like I said, last night I was working and this one here. Let me go back to from that. And but yeah, the weekly index meet and the weekly watch list will tell us to look for longs over here. All right. And and sometimes we're missing over there. We say, oh no, we want to wait for the to trade there. But by having the three combines, we can actually gonna it's like we have catches for all ways, whether it's gonna be the trend line, whether it's gonna be the strength direction of the weekly, or whether it's gonna be the retracement like this one over there. And that's the end. So how many of you like that strategy together? Do you think that will work much better than the other ones? The one we've been working with our stop? What is your opinion? Now, before I start, open the chats. As I say to you, Richard now is logging to there, so everyone can say thank you, Richard, for that. And if you're interested, as I say, this is now the EA here. So let me open it somewhere where we don't open and explain you a little bit of this, what is happening. Now, how many of us we enjoy to the how many of us we have enjoyed to the golden candle setup? Now the news is that in the E8, the 1.6 E8, our angel from heaven has set up the golden candle setup onto the E8. Can you believe that? The E8 strategy, the golden candle strategy, is now inside here. How many say you Pete to that? We know how powerful is that, isn't it? So imagine now trading these three strategies and using the golden candle on the 1 hour time frame. How scary could be that? Huh? All right, explain you. Let's see here. We say this is a level of resistance somewhere over there. All right, and we put it in this date over there. We say to the E8, okay, E8. Now I want you to look for bearish move. All right, that's what we're gonna say. I want to go short, and you put it over there, which we won't not do that way anyway. But what is gonna happen with the EA at that point is I said, okay, this guy wants to go short, and specific we have the golden candle strategy. Maybe Richard, we can change the comments about put it instead of midpoint retracement, we put the golden candle there. Would be nice, isn't it? Just to that. So what the EA will do, the price comes over here, nothing do, nothing do. The EA will wait for the market to come down, then is activate the golden candle strategy, comes back over here, but not only that, is gonna trade when the market is crossing below the desired pip buffer on here. So the whole 1 day and a half for you to watch the market is now on here. How good is that? Hmm? So the whole thing is the EA will work in that way. Just go around, come back, hits over there. Now it's went for the P buffer, and there's your trace from that moment over there. Okay. So let's see here. We got a resist, a support level. So we put in, we want to go buy. So the EA will wait for the market to come up, comes over here, touch the line, get the trade, and run. Here we say we want to go long, the market the same thing, wait for the market to come back, come there, touch the line, and goes. Here we want to go short the market, wait for the market to come down, come back over there, and there it goes for shorts. Here the same is waiting there for longs and for shorts. Now, when we look in this way, what the EA does is exactly what we normally looking with a golden candle. The benefits of this, the midline point is actually no log, but is floating around according to the price and comes and meet on a precise point. That's what scary it is. On the precise point is coming and is waiting for, no matter where you're looking over there, the market comes back, touch, and goes. The market goes back, touch, and goes from there. And whether, like I said here, we just take the example over there, comes back over here and touch. So the next day, this will cut you off, and that's it. So that's how scary is now this EA. It's just incredible how the EA, no matter in what platform we put in and whatever we say, whatever we want to do, our trades will be, that you can select from here to say, okay, the market is going down. You're trading with the weekly duration, so you say, I only want to trade the market to go short. So the EA will not trade here. It will trade, comes back, up, down, trade, stop loss. And that's how we continue looking for going short. The same thing, the EA will wait always the ABC setup to continue trading the directions that we want. Here, I prefer to work with the daily now performance. See, if I come over here, the EA will wait for the market to come down, go up again, trade. And if for some reason we go to stop out, trade back again in the midline, and there's your trade. Here, we come in the morning, say, yeah, that's a trade. The EA comes over there, trades over here, and there we go. So right there, same thing. Whatever we're looking, whatever the index meter is telling us, here inclusive, you can just look in the colors alone, which will be too much work anyway. But the beauty of things of here, that in any point that you want to trade, the EA always is going to be looking for these points over there to try. Always is going to come there to try. Now, Richards, you say 20 or 25, I think it is. He's been back testing the EA there. But this type of setups is exactly the golden candles setups. It's just unbelievable. When Richard told me about that day, I could not even sleep. Now, the good news is as well that you can go to any other time frame and make the same decision. You say, oh, yeah, here it is. You put in there and the EA will find you trade over there. And if you see through the week, as well changing, you can change the directions of any directions that you want in any time frame. So if here we're looking to go long, and the EA will draw like it's going back to the golden candle and takes over and over again. Here, for example, the market goes over there, takes over here, and that is trading. You can put it a daily time frame if you want to be more accurate as well, and the same thing. So if you have, imagine that the work that I do with the golden candle here. Right over there. And if you come from and some point in there, you say, oh yeah, that's already a break. So I'm going to be looking for the golden touch on a daily. It's not that scary that now, we can just leave that one there, work our way out, and forget it from there. And it's gonna continue just going back and look in any time frame and any moment that you're looking for. Let's see, we work in there and say, yeah, that's very clear from that move over there is everything there. So I'm gonna be looking the golden candle. Now, if I draw myself try to find the golden candle. Would say, yeah, that's my golden candle. So I'm waiting for the touch over here. Well, the EA will come, touch over there, and finds the trade. And you can put it in the midline once the market runs, and that is going to be over and over again. So if here, we say, yeah, that's it. It is the EA trades there. If we miss that trade, trades back again over here. If we see a slight move of the market, an ABC set up already over there, the EA will trade any time frame, anything that you want to trade. If you want to be in the weekly as well, you don't want to trade, you look in the monthly moves. So the monthly moves over there, and if I look myself, I can say, yep, this is a nice weekly candle close. That's my golden candle, and the EA will come, trace over there. Of course, you're going to need maybe 200, 300 pips on the weekly to trade, but is that worth it to try that? So the EA is now with the capacity of finding the golden candle without us to look in the market. How many of you say, praise the Lord for that? So let's see now, Richard, I suggested to Richard as well that what about if we can set up buy and sell, automatically? Now, of course, we will not be putting trades, like a 50 currency, 30 currencies to do that. But what I'm suggesting, and Richard said it is possible to have an auto manual. So the EA we're looking for the bullish golden candles setup as well for the bearish golden candle setup. So one is going up and this one is going down. So what the EA will do from there is will come, breaks, comes back and activate over here. Will come, breaks, comes back over here and activate over there. Will come, breaks, comes back and activate over there. Will breaks over here, comes back over there and activate the once the market breaks from here. And it can goes all the way down. Sometimes it's gonna miss it, who cares? But at the end of the day, now if that Richard can do, we're gonna make a statue to Richard, and then we're gonna praise and worship Richard. No, just kidding. But yeah, so then we can put one currency alone, normal, win ratio, risk reward, getting 1 to 3, and that's it. And the EA can work hands free, just looking for the golden candle setups. Now, when you look at how the chances are in this weekly candle close setup, they are, it's quite scary, how the market does these moves. Now, if we're looking for 50 pips, can we find 50 pips right over there? And you see here, it will not trade because the market, yes, break, comes back, but it never went the way down over there. And so on. Here, market comes over there, finds the ABC. So once you put in the EA, as I say, the midpoint retracement, maybe Richard, we can change that to the golden candle setup or something like that. So just do that. The EA always will be looking the directions that we see over there. Now, with the 3 strategies that we're just looking, all right, how many chances we have to now to get the best price on the house, looking that way, over here, and get triggered with the 3 strategies. My friend, it's 43 minutes, so it's better we have to do some work, and but that's the update that just made incredible, and I think it's going to change a lot today. So let's look now what we have for this week. So now we have 3. Now I'm going to finish the PowerPoint today, and actually going to send the PowerPoint to all of you so you can have study of that. All right, so you know that when when things are gonna set up and happen over there, yeah, so it will come up from that. All right, so there we are. So New Zealand, US. So what happened today? So that's our wish list. So remember now we have 3 trades, three ones that is gonna be. Can anyone remember which are the three are? See, just see if anyone was awake in the other side. What was the three weekly strategies that we have now? Number one was what? The weekly trend line. That's correct. And number two was, wow, the rest was sleeping, and Lawrence came late. So the weekly candle close, correct? Yep. And the third, the weekly direction as well is like the weekly candle close direction. And the third one is the weekly retrace. All right, keeping in mind with that, now we can be working that, and as well, one of the benefits of this is going to be that when we have, remember we say that on the monthly, we were talking about this monthly retracement over there. Now, my question to you there, what strategy in the weekly will help us to find the first week over there? Remember, now we're looking a little bit further up, but even with the three strategies on the weekly, we're gonna be able to find here, here, and there. With the retracements, yes, of course, this is gonna be the first week that it will be the could be the weekly trend lines, or as well the first week that is turning around. All right. So that's going to be here. We cannot use the other one because there is no retracements. But in here, we're going to keep an eye with this one. So when we have over there is the first week, that it will be the weekly candle close direction. So I think the more conservative will be because we're trading against the monthly direction. So the weekly candle close direction will be at that point if the weekly candle close. So that would be the strategy number two. You can use the strategy number one, which is the weekly trend line as well. But I think this one will be there. And then we're waiting for the ABC, which is going to showing up anyway in here. And we're looking right over there. And there it is, the ABC. And we get 500 pips from there. All right. So that's how now we're going to be able to actually trade this monthly retracements like that, looking now the three strategies of the weekly over there. So here we are, as we see over and here which strategy was applied over there in this trade over there. It was a strategy number one, which is what the weekly, the weekly no. Which strategy was in this one over here? The weekly trend lines, isn't it? So that's the weekly trend lines with the daily breakout and the monthly shopping levels, index meter, and there it is. It's flying. It's continue going that trade. So at the moment, if there is no retracement, at least if look, sometimes we will not have even the daily retracement, but we need to see this green thing change. This is one thing as well. Let me show you what I mean with that, because sometimes you want to trade, you see trades that is running from there, and what is going to happen sometimes that you will not have a daily retracements over there. All right, for example, in moves like this one. But when you see this, this kind of moves. Now, one of the good things, that let's say you already running, but you're waiting for the ABC to happen. Well, the ABC will happen somewhere over there. But every time the market retrace over there is going to be always a good opportunity to go on the direction of the major trend. All right, so this is something that, so at the moment here, we don't have that. We did have over here. So the second trade in this one was there. Well, in this one, is just continue flying from that level over there. So always remember, retrace is our frame, and we need to always maintain that one, that perspective over there. So Euro New Zealand, look, what strategy was it that? Again, it was the strategy number one, which was the weekly trend line breakout. The daily break, the index meter was there. It was a bit savage for the news, but we're looking at the monthly shopping levels, the weekly trend lines, daily breakout, index meter. And look, when I used to trade the daily highs and stop losses, I know that some people say, oh, that's scary, but the chances of survive this, that's the only way to do it. And that's what I mean. This strategy, we can maybe just say, okay, half a lot size, but this is my stop here. And once we got now the first retracement here, we got the weekly with us. We don't want to trade it with the market. We want to wait at least, even if it's overnight retrace, then I can say, yeah, now I want to trade that one there. And this is going to be up to everyone over there. The why you went to the Australia US? It's supposed to go pound New Zealand. Don't know what happened with me, why I changed these things. It's supposed to be here, there, and then. Anyway, now we'll see if I correct before tomorrow that. Australia US is another one that already the market called close right over there. So good on you. We make some pips with that one. And at the moment, the trading here, it was the weekly trend line breakout. So that was there. We got a monthly. If I draw a line over there, it was a monthly shopping level, and all this, and that's it. And if we draw over here, same thing. So now the moment what we're waiting here is for a retracement, or at least something that retrace over there. Now the good thing as well in here, you can put that one to the golden candle with maybe 15 pips stop loss or 10 pips with Australia, and you can get. But look, we are in a support, so we don't want to. We always want to buy a support and sell a resistance. So that's a resistance level. So we're gonna see and waiting for that one over there. Now this is interesting, this one over here, because actually I was about to trade in this, but I just want to wait until tonight with the pound New Zealand, because we have two strategies now here. We got the weekly retracement, which as you see is the strategy number 3, that if we have a good daily, and actually the pound New Zealand, it is on a red with a low possible, so pound New Zealand is over there. So yeah, that's now. Maybe later I will seek, because this is for me could be the strategy. And at the moment, the what I'm looking here is the strategy number 3. All right, because this is what is now. This is presenting us right now over there. So now, if I go trigger and the market moves and move the break even, if the market comes and does an ABC, because of that, we are in a monthly shopping level, then we shut the sell and we go the buy. And then we will have a big move from there, isn't it? We don't know. It happened here at again, and look what it did happen. Big collapse. It could happen again. But how do we know? We just don't know. We're just trading once a day and put those trades together over there. New Zealand yen, the same. So there it is. The market, it was there. Weekly trend line, daily breakout, index mira. So strategy number 1, and that is running that one over there. Euro Australia, we got weekly trend line, daily breakout, index mira. Possible we could say we did have some support, but don't know. Now this is interesting, because if you look at over there, this is we could indicate this one as the strategy number 3. All right, because we got the break of that, we got the monthly pullback, and here we have the first week up. It's actually matching up over there. So what we need over here, if we are not already in that trade over there, so we need to wait for the pullback. And when the pullback is happen, then we might have a good entry over there. So this was already in last week, and that's how we want to be looking from there. Pound Australia, same. So we're looking at weekly trend line, daily breakout, index mira, and some kind, if I draw lines from here to there, it was on some kind of support. And as well, right now we have, the weekly direction. So we're waiting for that ABC. As well, we can see that the market, this is only a retracement. So we don't know until the market is selling. So at the moment, here, the first trade will make me, the strike number 1 will make me some pips anyway. And if tomorrow the market change, I will take it. This is a strategy number 3. It's a weekly retracement. So therefore, I'm trading over there. And then let's see, it runs up to here, and it doesn't want to run anymore. So trailing my stop, and then maybe we have a bullish candle with the index mira, and then we have the ABC, and that could be there. But I will be actually setting up put in, stride number 1, stride number 2, stride number 3, so you can have the reference and learn from there. Weekly trend line, daily breakout, and there it is. So now the moment the market has break, we need to wait. So every time you see this, that's when you activate the EA. All right. So that's have that common sense that, yeah, this is the time to activate the EA because the market has retraced. And then if you want to be more safe, you can put the Donchain external to trade because the wait for the ABC anyway. Now the EA has the capacity to do that. US Swiss weekly trend line, daily breakouts, sort of kind of support over there, and there we are. And again, so the market comes to the touch line, runs, and look where we are. So now this is not retracement. This is definitely an ABC. So if I do the target and the weekly, I will have a list over there. So that will be maybe a quite long trade to do because this guy don't travel that much. US yen, same thing. So weekly trend lines, shoulder, head and shoulder, monthly support, daily breakout, index meter, and that it is. So I'm gonna be actually extending my I believe with the touch of the level you will not need the daily stop loss that normally need, but always measure the highest through the midpoint and be actually 10 pips generous from there. So because the trades are actually guaranteed in the way that it can go over there. US Canadian, so it's not really presenting nothing. We got the daily breakout, which was from there, and got a stop over there. So at the moment, and every time you see the red side, this is that. Okay, Dave, no worries. Thank you very much. Have a good day. And there we are, the run off from there. Pound US last week, Friday, was a setup and again. So we got just a pullback. So that was a continuation, and until now is continue with there. Euro US maybe was look to me like I said. I'm waiting for tonight. That see what happened with the price move. Once London is open, we can see clear that. And the beautiful as well is whatever direction is popping up. With the golden candle touch and the EA. Now we can see much better. That's the euro yen as well. I'm looking, this is kind of retracement as well. The daily is over there, the euro yen is over here, but like I said, I'm waiting for tonight because this move is quite strong. I have a sense that the euro is moving a little bit over there. So maybe if tomorrow we have again a new bearish day, could be an opportunity, but I was looking into that. Euro Canadian is nothing. Actually, the Canadian crosser will be a bit restricted to, just clear trades to trade, and that's it. Pound yen looks good to me. So now this is the number two, the strike number two, because we have the direction over there as well, the weekly trend lines, we could say. So we have a strike number one, a strike number two over there. So already the index meter is with us on a high over there. So therefore, I put in the 30 minutes time frame because the tomorrow explained the difference between the 1 hour and the 30 minutes. I think the 1 hour, sometime you miss. Richard said 85% works. We haven't sometimes they work, but I see that and once we got these specific days, the 30 minutes midpoint will get it. And then if you measure from here to there, it is 15, 20 pips maximum with huge potentials to go over there. Where was the other one? Pound Canadian. Yeah, that's the pound Canadian. We look. Canadian yen, so nothing today. And Swiss yen, we don't have nothing until we see something else. And then the dollar, I forgot to send this one. So the dollar is continuing his run, and we have the weekly trend line, daily breakout, and that it is. So now we're waiting. So you see the benefit of trading here, maybe half a lot size, then wait for the ABC. Then you can put the rest of the lot size over there, and then you run the trade, isn't it? And with the EA coming to the midline, there is a trade. And if you miss that, you're waiting for this one, and then you activate the EA again. So it's going to be so much fun now on because it's just going to be incredible the way the EA is does. So that's gold. We're looking at weekly trend line, daily breakout, daily candle close, and the direction, monthly shopping level possible, double tops over there. So we'll see how gold if the dollar is going up, gold has to come down. All right. So that's the oil. The same. Last week we did have, so I traded the retracement again. So that's still running over here with a potential to come to the target, match perfectly the target and the lows over there, and we'll see what oil is doing from there. S&P 500, it looks to me in a buy, so I got the retracement, the midpoint, waiting for that one later today. Australian 200, weekly trend line, daily breakout, well, you don't have index, mid daily candle close, and that it is. Look what actually the midpoint can give us, point. The market, you missed that trade, that's the time to trade over there. So right when the market changes the color, goes up again, and that it is the Aussie market is going up. Here we got a beautiful resistance, monthly shopping levels, and we got the weekly retracement, in this case with a daily candle close telling us the direction that this thing is going. UK 100, nothing for today. Japanese looking for a beautiful buy. Now, if the other markets are coming down, I don't think so the Japanese will do, but I just try what I see. Measure my risk, make sure this is in a small, and that's it. And Bitcoin got a stop out with that gap the market today. That's fine, but um, nothing we can do. Same with Ethereum, and saying I'm not looking to go short. I'm just looking to go buy. So now that we finish about to finish July, I think the Litecoin, Ethereum, and Bitcoin has a great opportunity. Keep an eye of that. To know this regard, like I said, these three cryptocurrencies, because they can be a big thing. My friend, is 1 hour and 1 minute, so I'll have to leave you right now. And yeah, so I hope so you like it. Keep this video, save it in somewhere so you can, review over and over again. As I say, I'm gonna add up more chats into my PowerPoint and send you so you have as a referral. But I think I call this the ultimate trading system because it's gonna be so good. All right. So we see you tomorrow, same time, same place. Have a good day. Cheers and bye.